Hey everybody, hope you're doing fantastic. The reason for this video is to talk about what the heck is going on in the world right now, coronavirus, the impact that it's having on stocks, the financial markets, how to not just survive these tough times, but how to actually thrive, how to earn money and take advantage of this opportunity, because that's the way that we see it at Enriched Academy. From a financial standpoint, this is an opportunity, and we're going to talk about that in this video. From a health standpoint, we recommend that you proceed and be cautiously calm. What we mean by that, no need to freak out, but no need, you shouldn't also be very calm. This is probably not a good time to be running around and hugging everybody that you see. Not a good idea. Cautiously calm. Okay, so from a financial standpoint, which is the reason we created this video, what do you do with your stocks? What do you do with your portfolio? If you're sitting on some money, is now the time to invest? So let's dive into it. The first thing that I want to cover is the state of the economy and the stock market. If you take a look at some of the major stock exchanges around the world, how have they been doing over the past year? So the S&P 500, which tracks 500 of the largest American companies, year to date, it's down 17%. So from January 1st, 2020 to today, it's down 17%. Dow Jones, another popular US market, is down 20%. The TSX, the Toronto Stock Exchange, the biggest in Canada, that's down 20% as well. This was interesting to me. The Shanghai Stock Exchange in China is only down 7%. Really interesting. And the Euronext, which is the largest in Europe, is only down 9.4%. Now, if we take a step back and we kind of turn off the media and we turn off all the news and we take a step back and we ask ourselves, what are the outcomes that can happen from this? If you really break it down, there's only two outcomes. Number one, this could be the end as we know it. And that's how a lot of people feel, that this is a virus that can spread and reach hundreds of millions, if not billions of people, and forever change the world. This could literally be like those horror movies that you watch. Very unlikely, but a possibility. That's the first case scenario. Now, if you believe that to be true, what I actually recommend, take all your money, sell, get that money in cash, go and buy as much shelter, protection, food as you possibly can, because in that world, the banks don't exist. Money doesn't even exist in that world. Okay, the second scenario, which is probably a little bit more likely, is this too shall pass and we'll go back to business as usual. Whether it's a month from now, 6 months, a year, or 2 years. That's probably more realistic. And as an investor, when you're investing, and again, this is just a very simple approach. When you're investing, there's three outcomes. Number one, let's say you invest, the markets can go up and you're making money, you're high-fiving, which is what the past 12 years have been like. That's the first thing that could happen. The second thing is you can invest and that you could kind of, the stocks don't go up, they don't go down, they're kind of flatline. In that case, you're still earning money through dividends, which are awesome, like payouts. The third thing can happen is you can invest and they could go down, which is what is happening right now. And what we know with every single recession, every single market downturn, whether it's from a virus, whether it's from a financial crisis, a terrorist attack, whatever it might be, is it always recovers. There has never been a time in the history of the stock market where we've had a downturn and it's never recovered. It always recovers. That's just how it is, because if it doesn't recover, again, there are bigger issues that are going on than money. So that's the best way to look at it. Really just two outcomes, three ways as an investor. Now, I have some notes here and I want to go through some of the different questions that we're getting and what people are thinking of right now. And the best way to explain the stock market, because it's kind of crazy, is why are stocks down right now? Stocks are down because short-term stocks act on emotion. And right now the emotion is panic. People are selling, people are freaking out. Long-term, stocks react based on value. So short-term, it's emotion. No one can explain the short-term, but long-term, it's always based on value, the performance of different stocks, markets, and indexes. And again, I kind of hinted at this before. Study history. Go and take a look at the top, 10 different stock market crashes. What happened? How did they happen? And once you understand what's happening in history, you can't predict the future, but it could give you a really good idea of what the heck is going to happen. And analogy that we like to use is a stock market is like a roller coaster. There's all these ups and downs. Now, what's the worst thing that you could do during a roller coaster? This is the worst thing, right? You're in the middle of the roller coaster and you're trying to get out, and you're trying to get off the roller coaster in the middle of the ride. Same thing with the stock market. As an investor, the worst thing that you could do is try and get off in the middle of the ride. Some big mistakes. Here's some wrong thinking and some mistakes that a lot of people make. Now, the first one, I'm going to admit, I was on the cusp of making this mistake last week, and this is the mistake where people think to themselves, hey, you know what? What I'm going to do, I'm going to sell my portfolio, keep my money in cash, and when the markets drop more, then I'll invest. That right there, as good as it sounds in theory, as tempting as it is next to impossible to do. Jack Bogle, who's someone that Warren Buffett actually said had the biggest impact on the everyday investor, said he has met tens of thousands of investors in his career. He's never been able to find someone that's been able to time the market like that. It is so impossible to do that. It sounds great in theory, but very difficult. And what a lot of people don't talk about is when you're waiting on the sidelines trying to invest, the opportunity cost is huge, because here's what happens. Let's say that you take your money in cash today and next week the stocks go even further. You're going to be sitting on the sidelines thinking, oh, it's going to go even more down. I'm going to stay in cash. And then the week after, it might even go lower. And you're still holding cash like, okay, it's going to go lower. But maybe it doesn't. Maybe it just starts to recover. Then you're still on the sidelines thinking, okay, I'm going to wait till it comes down a bit, but it just keeps going up. And what happens over the next 4 to 5 years, we're in another amazing bull market and you're still sitting on the sidelines, missing out, kicking yourself in the butt, not taking advantage of the dividends, the growth, and that's the opportunity cost that nobody talks about, but is so important. So if you're trying to think, I'm going to time the markets, do not try and time the markets. It's not about timing the markets. It's about time in the markets. Get invested, put together a schedule, which we will talk about. Okay. Another big mistake a lot of people make is they take a look at their portfolio and they're like, oh my gosh, I'm down $10,000 or $15,000. You're not down until you sell. You have not lost money until you sell. In 2008, the only people that have lost money are the people that sold. If you held on, you would have made money. You would have doubled, tripled your money. And just to give you the perspective of how powerful time is, let's say we go back to 2008, the huge financial crisis, and you invested $100,000 a day before the markets crash. If you did that and the markets crash and you held on to those stocks until today, you would have doubled your money, even though it's down 20% this year. That just shows you the power of time in the market. It outweighs everything. The more time you have in the markets, the less likely you're gonna lose money. It's all about being patient. Okay. What to do, how to take advantage of this opportunity. That's the way that we see it right here. There's that famous Warren Buffett quote. I'm sure you've seen it everywhere. When people are fearful, be greedy. When people are greedy, be fearful. Right now, everyone's fearful. This is a great opportunity for you to be greedy. Now, what do you do? Because there's so many different things that you could do. And we recommend sit down, grab a journal, and start creating a plan for yourself. Start putting together some sort of plan, because if you fail to plan, you're planning to fail. And in that plan, this is where dollar cost averaging is so powerful. If you're investing on a regular basis, continue to do that. That's where dollar cost averaging comes in. Every month you invest a regular amount, whether the markets go up or whether they go down. And now they're going down, but you continue to invest. You're not picking which days to invest. You have it automated, you have it on a schedule. Maybe it's the first of the month, that's how I do it. So the first of the month, I'm investing. I'm gonna share with you some advanced strategies a little bit later, but dollar cost averaging is how you make the ups and downs of the market work for you. The other thing is asset allocation. This is where asset allocation is so critical. It's not just about putting all your money into a US stock or Canadian stock. It's about having a good balance of different asset classes. And this balance will and should protect you when the markets go down. This is why bonds are so powerful right now, or, safer investments, alternative investments, real estate. For someone that says, oh, I'm going to screw all that, I'm just going to invest, you're probably hurting right now. But if you're someone that was smarter, that had a good asset allocation, didn't put all your money in the stock market, put some money in bonds, put some in real estate, you're probably not down as much as other individuals. So those are two really important things. Some tips I have for you is read Unshakable. Tony Robbins has an amazing book called Unshakable, and it talks about how to prepare, how to thrive during times like this. So great book there. He shows you the history of stock market crashes. Fantastic book. And again, study history. I'm going to share with you a chart in the links or in this email, wherever you're seeing this, and it's going to show you all the different major viruses over the past, I think, 50 years. And it's going to show you the impacts of the stock market over 6 months and 12 months. And in most cases, these viruses don't have a huge 12-month impact on the markets. I think AIDS had one. That was the only virus, and that was a long, long time ago. So study history. History can't tell you what's going to happen in the future, but it could give you a good idea. This is the third one. Delete the investing or any stock market app that you have on the phone where you're getting constant notifications, because that will drive you insane. I remember having the stock market app on my phone, and every hour of every day I'd check and I'd be like, damn, I'm down $5,000 today. And then the next day, you're like, yes, I'm up 5,000. Every day is just an emotional roller coaster ride of happiness and sadness and anger. Delete that app. That information, to me, I try so hard not to look at the markets because that information doesn't determine my plan. My plan is in set. Nothing, that doesn't predicate my plan at all. No matter what happens in the markets tomorrow, that's not going to change my plan. Have a plan, stick to it, and don't throw it out the window. Mike Tyson's got a great quote. He says, everybody has a plan until they get punched in the face. The same thing with investors. Everybody has a plan until something like this happens. The plan just gets thrown out the window. Stick with your plan. Another big tip that we have is understanding human behavior is the enemy of becoming a successful investor. Human behavior, emotions. The more that you could separate your emotions and your logic, the better. And every decision that you make today when it comes to investing, ask yourself, is this decision more logic-based or emotion-based? And if it's more emotion-based, it's going to be a bad decision. Be smart about the decisions, be logical about them, and be patient. This too shall pass. It's hard to imagine 2-3 years from now, people stop going on cruise ships, people stop going to Walmart or stop going to Costco, stop going to McDonald's. The economy will recover from this. We're very confident in that. So this too shall pass. Be patient. Okay, now time for the fun stuff. Let's talk about some advanced stock market strategies. Now I mentioned dollar cost averaging. That's going to help you through this. But what you could do is you could tighten up the dollar cost averaging schedule. And what I mean by that, and what I've done is, let's say you're investing once a month on the first of each month, $1,000. That's your plan. What you could do is, instead of doing $1,000 a month, you take that and you do $250 per week. So every Monday, you're investing $250 per week. And the reason that's so powerful is because you're taking advantage of more of the ups and downs. 1 week could be up, 1 week could be down, and you're just tightening up the schedule, which you're gonna take advantage of more of these ups and downs. If you could do every day, that's even better, but every week that'll do well. That's what I'm doing right now. Now, when it comes to creating your plan, the most important thing is be as specific as possible. And a good metric to use is, if you gave your plan to a robot, would they be able to execute on that plan? So if you gave your plan to a robot, would they be able to execute? So it has to be very, very specific. For example, when I started putting together my plan, it wasn't specific. It was like, I just invest $250 a week. But which accounts? What do I buy? When do I buy? None of those details were specified. So now my plan is, okay, invest $250 per month in my TFSA on Monday every single week. That was my first plan. Then I kind of adapted, and this is a bit more advanced. Now I have a plan where it's invest $250 per week, but only on the days where there's a 4% or more decline. So I'll only invest $250 a week, that's my max, but only on the days that are a 4% decline or more. So for example, let's say Monday comes and the markets are down 10%. I will invest $250. But let's say on Tuesday, they're down another 10%. I've maxed out for the week until next week. Then I could start reinvesting every time it goes down by 4% or more. So you can see how the criteria is very specific. You need to know what you're buying, what accounts. Highly recommend that you invest in your TFSA or your RSP because it's tax-free growth. If you put in $10,000 in your TFSA and it grows to $100,000, you can take that $100,000 out without paying any tax. Same thing with your RSP. Tax-free growth, especially in times like this, are amazing. So important. All right, we got a couple really awesome questions that came in. A lot of people asking what stocks to buy. Should I buy, Carnival Cruise stock? Should I buy Royal Caribbean stocks? What do I buy? Oh, now what we recommend, stick with your ETFs. And the reason why, you don't want to put all your eggs in one basket, and diversification in a time like this is so important. So invest in the ETFs, which again is a fund that holds hundreds of different companies. Why? Because let's say you invest in an individual stock and it goes bankrupt. All your money is gone. But if you invest in a fund and one company goes bankrupt, then you still have hundreds of different companies that are holding you up. So ETFs are definitely the way to go. Now, if you're feeling a little bit adventurous and you do want to buy an individual stock, there's so many that you can take a look at. What we recommend is take 10% of your total budget and allocate to individual stocks, no more than 10%. So if you're investing $1,000 a month, 100 can go into the individual stocks. Another great question we had from a lot of you was, as a beginner, where do I start? Now, the number one recommendation, as cheesy as it sounds, is education. You need to educate yourself, understand how the stock market works, how recessions work, how to take advantage of opportunities like this, and you will know you're ready to invest when this recession doesn't scare you anymore. Right? When this doesn't scare you anymore, you are ready. If this scares you, you're like, oh, I really don't want to invest, I'm so scared to, and you're panicking, you're not ready. You need to increase your education, because here's what happens. The lower your education, the lower your confidence. And the lower your confidence, the worse decisions that you're going to make, the poor quality decisions you're going to make. As your confidence increases, it comes from education. So high degrees of education create high confidence. High confidence equals high decision making, quality decisions. So education is everything. The second thing that you want to do, start with your asset allocation. If you ask Warren Buffett, David Swensen, Carl Icahn, Jack Bogle, what's the most important thing when it comes to investing? They'll all say asset allocation. After that, pick what accounts you want to invest in. We recommend your registered accounts, your TFSA, your RSPs. Go with ETFs and start with small amounts if you're scared. Again, education. I know it's so cheesy and so corny. That's the key if you, as a beginner, you want to start. Okay, again, someone asked, Arian, when do I buy? It's not about when to, no one knows when the markets are going to go down. For all we know, this coming Monday, the markets can just keep going up. We don't know when the market bottom is going to happen. And if you're trying to wait until the bottom or getting close to the bottom, I promise you, you're going to miss out on a huge opportunity. Instead, put together a plan of investing a certain amount each week and start investing starting next week, whether it's every Monday. That's the easiest thing. Every Monday, invest $250, $50, and keep the momentum going. Okay, another great question says, Arian, I have a lump sum of money. I don't know how to invest, where to invest, or how to create a plan. So this is what we recommend. If you have a lump sum of money, what we recommend is take that money and create a plan. So let's say you have $10,000 and you want to invest it over a 5-month period. Pick a period, whether it's 5 months, 12 months, let's say 5 months. You want to invest all this money over 5 months. You got 10 grand. That means it's $2,000 a month. $2,000 a month is $500 a week. Then you can start getting into the game. It's that easy. Create a simple plan. And if you fail to plan, you're planning to fail. If you don't have a plan in a time like this, you're missing out on a huge opportunity. Great questions. Thanks so much, everyone. I hope you enjoyed that quick video. This is going to be an ongoing theme as the markets recover. So what we want to do is we want to really get some engagement here. So if you have any comments, any ideas, any strategies, any updates, please jump into the questions box. I'm going to be sharing what I'm doing, what I'm thinking. So let's get a lot of engagement. Let's start helping each other out. This is what financial literacy is all about. We could do it alone, or we have this amazing community where all of you are like empowered and you're inspired to take action, let's help each other out. If you're someone that's already investing, help someone else. If you need help, feel free to ask any questions. So thank you all so much. Hope you have an amazing rest of the day, and take care.